Hey everyone, and welcome back. Today we're doing a deep dive on Common Stocks and Uncommon Profits by Philip Fisher.
Okay.
So for anybody listening who wants to kind of get the core ideas without reading the whole book,
Right.
we're going to try to distill that down into a
Yeah.
fascinating and entertaining conversation.
I'm ready.
So what is the first thing that
Yeah.
really jumped out at you from this material?
So, Fisher wrote this back in the 50s,
Mm-hmm.
and it's amazing how relevant it still is today.
Yeah.
And one of his biggest things was he was not a fan of just looking at numbers.
Yeah.
He thought you really had to understand the business.
So less spreadsheet roulette
Mm-hmm.
and more
Way more.
kind of like due diligence on steroids.
Yeah, that's a good way to put it.
Okay.
Might be.
What's the first big idea?
Patience.
Okay.
He was all about long-term investing, finding those companies that you believe in for years or even decades.
Yeah.
Not about getting rich quick.
So
Right.
less gambling, more like cultivating a garden.
I love that analogy.
You plant the seeds and you wait for them to grow.
Yeah, exactly. And, you think about somebody who invested in Apple when it was just two guys in a garage.
Right?
The people who held on through that roller coaster ride are reaping the rewards now.
Yeah. But that kind of vision,
Mm-hmm.
you can't just pull that out of thin air, right?
Oh, no.
How did he actually find those companies?
Well, he had a system.
Okay.
It's one of the coolest things about his approach.
Here.
He called it the scuttlebutt method.
The scuttlebutt method.
It's kind of like being a detective for your investments.
Okay. I like where this is going.
Anywhere.
Explain this to me.
So instead of just reading the financial reports and stuff, he
Oh.
said you got to gather information from everywhere.
From everywhere.
Talk to employees, talk to customers,
Wow.
talk to suppliers, even competitors.
Yeah. So it's more about getting
The full story,
the full story.
all angles.
Okay. So for example, what kind of question would you ask?
Oh, so many.
Okay.
But let's say you're looking at a software company.
Okay.
You might ask an employee,
Wow.
hey, what's the company culture like?
Yeah.
Or, what are some challenges the company's facing?
Okay.
If you're talking to a customer, you might say, what do you like most about their product?
Hmm.
What could be improved?
And that's something you wouldn't necessarily get from
okay.
a balance sheet.
Exactly.
Yeah.
And then you could even talk to a competitor
Oh, wow.
and say, hey, what do you think of this company?
Oh, that's a bold move.
It is bold.
Okay, so you've done all this detective work.
Yeah.
You think you've got a good company.
Uh-huh.
How do you know
Right.
if it's really a good investment?
He had another tool for that.
Okay.
He had his 15 points to look for in a stock.
A 15-point checklist.
It was a checklist, yeah.
What?
And I don't think we have time to go through all 15,
Okay.
but they cover everything.
Give me a couple.
Research and development,
Okay.
management quality,
Mhm.
scalability, profit margins.
Okay. Are there any companies that you can think of today?
Oh, tons.
Okay.
That really exemplify a lot of these 15 points. I think Amazon's a great example.
Okay. Yeah.
They've got that culture of innovation.
Mm-hmm.
They're super customer focused,
Mhm.
visionary leader.
Right.
They just know how to scale.
Yeah.
Really embodies a lot of what Fisher was talking about.
So it's amazing how a lot of these principles that he wrote about back then
Yeah.
are still relevant today.
Absolutely.
So you mentioned visionary leader.
Yeah.
How important was the leadership aspect
Huge.
of Fisher?
Absolutely huge.
More than just looking at
Oh, yeah.
a CEO's resume.
He was adamant that you really look into the management team.
Okay.
And he was looking for things like integrity and a long-term vision,
Mm-hmm.
not just somebody who's trying to pump up the stock price and make a quick buck.
So it reminds me of that quote,
Yeah.
bet on the jockey, not the horse.
Exactly.
It's the people
It is.
that make the company.
Yeah, sure.
Okay, so
Yeah.
shifting gears a little bit,
Okay.
Fisher was also really big on innovation.
Yeah.
How did he see that tying into a company's success?
He thought it was absolutely critical for staying ahead of the competition.
Mm-hmm.
Think of companies like Tesla or SpaceX.
Right.
They're constantly innovating,
Yeah.
pushing boundaries.
And they're not afraid to
Not a...
rewrite the rules a little bit.
Exactly.
So it makes you wonder,
It does.
are companies today genuinely innovating?
Mhm.
Or are they just kind of playing catch up?
That's the question.
Okay, so we've got the long-term vision.
Yep.
We've got the scuttlebutt method.
Uh-huh.
We've got the checklist.
Yeah.
We've got strong leadership.
Mhm.
We've got innovation. Anything else we need to know before we move on?
This might surprise you.
Okay.
He was not a fan of excessive diversification.
Really?
Yeah.
I thought spreading your risk was
Yeah.
one of the golden rules.
Well, I know. You
Oh,
think...
God, don't put all your eggs in one basket.
Right.
But he had a different take.
He did.
Okay.
He said if you own too many stocks, it really dilutes your returns
Okay.
and makes it hard to actually keep track of all the companies.
So it's like trying to juggle too many balls.
Too many things at once.
Yeah.
You're going to drop something.
So he's more about like finding a smaller number of companies
Yeah.
that you really understand, really believe in
Absolutely.
deeply.
Okay. Yeah.
That makes a lot of sense.
It's like being a chef.
Okay.
You want to have a few really amazing signature dishes.
Right.
Not just like a giant buffet where everything's just kind of okay.
Where nothing's really that good.
Exactly.
Right.
Focus your energy.
Okay, so we're starting to see the world through Fisher's eyes now.
I hope so.
What else did he have to say
Yeah.
about approaching the market?
Remember all that talk about long-term vision?
Yes.
It ties into his next principle,
Okay.
patience.
Okay.
He really hated overtrading. He said buying and selling all the time just eats away at your profits.
It's tempting, though.
I know, right? Especially when you're watching those stock prices bounce around every day.
Yeah.
You just want to like jump in.
Yeah, like, ooh, I got to get in on that.
Right.
Okay, so how do we ride that roller coaster?
Well, he said you got to find those high quality companies
Okay.
and hold on to them,
Even when
it gets bumpy.
the market's
Yeah.
like having a temper tantrum.
Think about the people who held on to Amazon through the dot-com crash.
Right.
They were rewarded for their patience.
Big time.
Big time.
So do you have the temperament
It's a good question.
for that?
Yeah.
All right.
It's not for everybody.
So we talked about how he wasn't obsessed
Right.
with finding like a cheap stock.
Uh-huh.
So is he saying that we should just ignore valuation altogether?
No, not exactly. He just thought that growth potential was more important.
Okay.
Even if the company is not a bargain at the moment,
So you might have to pay a premium.
you might.
But if it's a company you believe in.
Yeah, if you think it's really going to grow,
Okay.
that higher price is justified.
Like Tesla, for example.
Well, exactly.
Sometimes a high valuation is justified because of that explosive growth.
Totally.
So you got to look beyond just the numbers sometimes
You do.
and see that bigger picture.
The long game.
Okay. Did he have anything else to say about
Yeah.
these market fluctuations?
This is a good one.
Okay.
Don't fear volatility.
Okay.
He said those ups and downs are totally normal, even healthy.
Really?
Yeah, he actually saw dips as buying opportunities,
Oh, wow.
not reasons to panic.
So instead of getting worked out by the wave, you're riding it.
Exactly.
Okay, I like that.
He thought if you could stay calm and rational during those turbulent times, you could actually benefit
Okay.
from those swings.
So what's the last big idea
Okay.
from Fisher?
This one is so simple, but often overlooked.
Okay.
Learn from your mistakes.
Learn from your mistakes.
He said analyze both your wins and your losses.
Yeah.
Because understanding why an investment failed can be even more valuable.
Than just being happy about your wins.
Totally.
Okay, so what kind of questions would he have us ask ourselves?
I think he'd say, like, what did I miss?
Okay.
Did I ignore any red flags?
Yeah.
Did I get caught up in the hype? What can I learn from this experience to make me a better investor?
This is all really great stuff.
Yeah.
I feel like we're only scratching the surface here
I know, me too.
of Fisher's wisdom.
There's so much more to explore.
Can't wait to dig in some more
Me too.
when we come back. That idea of, learning from your mistakes,
Yeah.
really important.
So important.
You got to be able to adapt and evolve
Absolutely.
as the market changes.
The market's always changing.
Always changing.
Yeah.
So, staying nimble like a surfer,
Exactly.
adjusting to a new wave.
Yeah.
Okay, so I think one thing that people might get a little confused about with Fisher
Yeah.
is that he only cared about growth stocks
Right.
and that he completely dismissed value investing.
Oh, okay.
Is that true?
Not really.
Okay.
I mean, he definitely loved growth, but he also understood the importance of value.
Okay.
He thought that growth should be sustainable. It should be built on like
Solid fundamentals.
solid fundamentals. Yeah.
How would you explain intrinsic value
Okay.
to somebody who's maybe new to investing?
It's basically like figuring out what a business is truly worth
Okay.
beyond just like the stock price, at any given moment. It's more about looking at like their assets, their earnings potential,
Okay.
their long-term
It's
prospects.
like as assessing the value of a house.
Yeah.
You look beyond the paint job.
Right, you're looking at the structure.
Yeah, you're looking at location.
Location, exactly.
Okay, so what's another misconception about Fisher?
I think some people find his methods like too complex.
Uh-huh.
They see the scuttlebutt thing
All right.
and they think, oh, there's no way I have time to interview a bunch of people before I buy a stock.
Right.
But
It does sound a little
it sounds intimidating.
intimidating, yeah.
But you don't have to go full-on detective mode
Okay.
to benefit from this idea.
Okay.
It's really just about doing thorough research. So, read industry reports,
Okay.
pay attention to company news, analyze their financials.
And we have more tools now than people did
Way more tools.
back in Fisher's day.
Oh my gosh, yeah.
We've got
The internet.
the internet. We've got financial databases.
Financial databases.
We've got all these analyst reports,
analyst reports.
social media even.
And all of it. Yeah.
So you can use those tools
Absolutely.
to be more efficient with your research.
Like you have a research team at your fingertips.
So how do Fisher's ideas
Okay.
hold up in today's market?
That's a great question.
Some people might say that his approach is kind of outdated
Right.
in this world of like algorithms and
Yeah, with all the
high frequency trading. And
the crazy news cycle and
Yeah.
all that stuff.
what do you think?
I actually think his principles are even more important now
Really?
than they were back then
Okay.
because we are just bombarded with information.
So much noise.
Constant noise, right?
Yeah.
It's hard to cut through all that.
Yeah.
And I think his focus on like long-term vision and
Yeah.
doing that deep research
Yeah.
and really just focusing on quality, it's like a beacon in the fog.
Okay.
You know what I mean?
It's like getting back to the fundamentals.
Exactly. Back to basics.
When the world's going crazy,
Yeah. When everyone's panicking, you got to
you got to stick to your plan.
stick to the plan.
Okay. So one thing we haven't really talked about
Okay.
is the psychology of investing,
Oh, yeah.
which I think is the big elephant in the room.
Absolutely.
Because even if you have the best plan,
Doesn't matter.
if you can't control your emotions,
Right. It can all fall apart.
you're going to make bad
For
decisions.
sure.
So what did Fisher have to say about that?
He knew how important this was.
Okay.
He said, you have to control your emotions.
Okay.
Don't let fear or greed make your decisions for you.
So you need discipline.
You need discipline.
You need to be able to think for yourself,
Absolutely.
not just follow the herd.
Right.
So it's not just about avoiding
Yeah.
panic selling when
Right.
the market dips.
Totally.
It's also about not getting caught up in the hype
Yes.
when the market's going up.
Exactly. You don't make
Making impulsive decisions.
impulsive decisions.
Yeah, you got to have that. You got to have that check.
Checklist
Yeah.
in your mind to keep yourself grounded.
Keep yourself grounded. Yeah.
So one final point from Fisher
Okay.
that kind of ties everything together.
I like this one.
What is it? Okay. So he believed that investing shouldn't just be about making money.
Okay.
It should be enjoyable.
Oh, wow.
It should be intellectually stimulating.
Okay.
He thought it was a way to learn about new industries,
Yeah.
explore new technologies, be a part of something bigger than yourself,
Yeah.
you know?
Like finding a purpose in your investments,
Exactly.
not just chasing profits.
Not just chasing profits, right?
Okay. I love that.
Yeah.
So we've gotten a really good overview here
We have.
of Fisher's philosophy,
Yeah. Just a crash course.
a crash course.
But hopefully a helpful one.
Okay. So now let's shift gears a little bit.
Yeah.
I really like that idea of having a purpose
Yeah.
behind your investments, not just, looking at numbers.
Right.
So as we kind of wrap up our deep dive here
Okay.
on common stocks and uncommon profits,
Right.
what are some key takeaways
Okay.
for listeners?
I think one of the biggest things is that long-term thinking.
Yeah,
It's more crucial than ever.
it is.
It's so easy to get distracted
Mm-hmm.
by the, short-term noise,
All that noise.
especially nowadays.
Yeah,
But real wealth,
yeah.
it takes time.
Takes time.
It takes patience.
It's like planting a tree.
I love that.
You can't expect to see fruit right away.
Exactly. Give it time to grow.
Yeah.
Yeah,
So your investments also need that solid foundation.
they do. And that means like
Yeah.
carefully selecting companies, looking at their management,
Yeah.
innovative products and services.
And that's where the scuttlebutt method comes in.
It all ties
You
together.
got to do your research.
You got to do your research.
Don't just skim the headlines.
Right. Go deeper.
So another thing is
Uh-huh.
Fisher wasn't afraid
Oh,
to
yeah.
go against the grain a little bit.
He was a contrarian,
Yeah.
for sure.
He questioned that whole diversification thing.
Yeah. He thought you should really focus on just a handful of
Yeah.
really high-quality
It
companies.
was like building a championship sports team.
Okay.
You'd rather have a few superstars
Yeah,
than a bench full of mediocre players.
exactly. Quality over quantity.
Okay. And then he said, embrace the volatility.
Oh, yeah.
Don't be scared
It's going to happen.
of the ups and downs.
It's part of the process.
He actually saw dips as buying opportunities.
He did.
I like that.
Yeah.
It takes courage, though.
It's
Like,
clear.
stick to your guns when everybody else is panicking.
It's not easy.
He's got that great quote,
I love that one.
don't be afraid to be a loner, but be sure you're right.
So,
So if our listeners could just apply one
okay.
of Fisher's ideas today,
Right.
what would you recommend?
Oh, man. That's tough.
I know.
So many good ones.
It's so many good ones.
If I had to pick just one,
Okay.
I would say embrace that long-term perspective.
Yeah?
You know, so much of the financial world is obsessed with
The short term,
short-term results.
Yeah.
You know,
quarterly earnings,
quarterly earnings,
daily stock movement.
all that stuff.
Yeah.
But Fisher reminds us that real wealth
Takes time.
takes time to build.
It does.
You got to shift your mindset to that longer time frame.
So for those who want to learn more,
Yeah,
we highly recommend
absolutely.
checking out his book,
Yes. Common Stocks and Uncommon Profits.
full of timeless wisdom.
It really is.
Well, that's all the time we have for today.
Okay.
We hope you enjoyed our deep dive into the brilliant mind of Philip Fisher.
He was brilliant.
Remember, investing is a marathon, not a sprint.
Good one.
Stay curious, stay informed, and happy investing.
Happy investing.